Okay, hi there. This is Kim Willis. I want to talk to you about client advisory services when tax and compliance work is no longer enough, and that's me. If you run an accounting practice and want to future-proof your business, I have an idea for you. It's a way to develop another income stream to generate more fees and clients. That's right, new clients. How can you do it? Well, you may have heard about a trend to add client advisory services to a basic tax, accounting, or bookkeeping service. I work with specialists who help accountants establish an in-house cash flow advisory service. And it's not just about preparing cash flow forecasts for clients. Any accountant can do that. Cash flow services or advisory services include cash flow management and optimization. They look at areas like operations, sales, marketing, and systems involving the entire company. And here is where it gets exciting. I'll help you generate a steady flow of inquiries from business owners who need help. Do you like that idea? Say yes. Before I discuss this a bit more, I'd like to share a case study with you. It'll show you how to turn the $3,000 a year tax clients into clients that pay you $15,000 to $30,000 every year as their advisor. I'm also going to show you how you can add $5,000 to $50,000 a month in fee-based revenue to your practice. And you can add these services without any conflicts and without taking on any additional risk. And the best part is that it's more fun than traditional accounting and financial services. And get this, your clients will thank you after you've helped them. Why? Because when you offer a cash flow advisory service, it'll transform you from a cost for your client to that of a trusted advisor who adds value to their business. The payments from your clients will be considered an investment because the value you provide will far outweigh the fee they pay you. But first, I want to address the three biggest issues that exist in the financial services industry today from an outsider's perspective. The first threat is outsourcing. A lot of basic accounting work is being outsourced to overseas service providers. Bookkeeping is being sourced overseas, usually to workers in developing countries, and you're probably very well aware of that. The second threat is automation through artificial intelligence. In the US, for instance, Intuit is leading the way and reducing the need for standard accounting and bookkeeping service. Their new AI service kicked off in 2020, and since then, millions of businesses now use it when doing their tax return. The third area is differentiation or lack of it. It's very hard to differentiate tax and bookkeeping services between one provider and another. And if you can't differentiate, then clients are going to shop around based on cost because you're not giving them any other option. So lack of differentiation, which is creating pricing pressure, is threat number 3. And here is the wonderful thing about having a cash flow advisory service. It won't be outsourced and it can't be turned into AI because it's not something that software or a worker in a developing country can do. This is because you'll be getting involved with their operations, pinpointing problems and creating solutions. Everything is bespoke, custom. But here's the best part. There is massive demand and no one to fill it. You may even find that you already have clients ready for your help and they need it today. So I'm going to share some symptoms that you might be seeing in your own client. And as I read each one, think of the clients that you have that are experiencing these problems. These are the clients that are ready to hear about cash flow advisory services. So do you have any clients that are experiencing fast growth, really fast growth? I'm talking at least 25% a year, but perhaps even 50, 100, 200% growth. Flat or declining revenue would be another symptom, or shrinking margins and profits declining faster than revenue, and accounts payables that are chronically past 45 days without any ability to catch up. Key vendors who are threatening to stop shipping to your clients is another warning sign. Other telltale signs: uncollected receivables, high interest expenses from maxed out credit cards, overextended credit lines, very high interest-bearing loans, or huge fees associated with those loans. Local, state, federal government tax is another issue. They're past due and there's trouble a-brewing. It's a major issue for some businesses. Inability to make capital acquisitions because they can't get capital credit is another one. But what about this? Owners who don't pay themselves. There are others, but look, I bet you have clients with problems like these. Put your thinking cap on, take out a piece of paper and a pen and write a few names that come to mind. Good news. Got good news for you today because you can help them now. Beyond the traditional historical bookkeeping and compliance work or archival work, as we sometimes call it, and we know it's the bread and butter of so many practices, but companies get squeezed for cash from poor performance or extremely great performance because they're making too many sales. They experience cash crunches, and we've seen clients who get confused because The P&L reports that you give them don't match with what they see in their bank account. If you have clients facing any of the problems I described and you have potential clients for this type of service, your life is about to change for the better. The beauty of this system is that you can service your existing clients at a higher level or differentiate yourself from other accountants in the marketplace. I know you've seen struggling clients that you wanted to help, but perhaps you weren't completely sure how to do it. I'm reminded of a story about a friend of mine. He started working with his father, who was the CEO and part owner of a manufacturing company that got into financial trouble. He watched him on a daily basis trying to get money in the door that immediately is earmarked for exactly what was going out the door. He realized that small businesses manage their companies based on how much cash is available or would be available. But they didn't think about the future. It was a day-to-day situation, hand-to-mouth kind of thing. Typically, they were looking at their bank account or at the history that their accountants gave them. Or they were looking at accrual-based reports, or even worse, they ignored their finances altogether until, well, you know what hits the fan. They reached that crisis point. There are different types of businesses with problems. One of them is smaller, younger businesses, and they're struggling to have the cash that they need. They're often undercapitalized. Others are more established, but for various reasons, perhaps including COVID, they've got a cash flow problem. They need to understand the underlying reasons for the cash flow issue. But here's the fun part. We don't just look at the finances. We also look at sales, operations, marketing and systems, the entire business. And you don't need to have much experience in this area. You can learn it if you want. Once you know where to look, the solutions become obvious. Let me give you an example. The same friend I was telling you about, he was also sharing another story with me about his first cash flow advisory client. And this is what the client said to him, to my friend. My accountant told me I made $250,000 last year. Where's all my money? Where's it gone? He was aggravated as he showed my friend the P&L in one hand and his bank account statement in the other. His company was at significant risk of not making payroll in 2 weeks. It was time for action. My friend started analyzing the books. He walked around with the owner and talked to his employees and saw how the business was run. He then populated the cash flow model. It turned out that there were tons of obvious opportunities to immediately get cash back into the bank, but the business owner was simply too close to his business to see them. He was too worried and upset about making payroll to see the glaring problems. So my friend found the cash for his client. He found it in receivables. He found it in forgotten off-balance sheet assets that were lying around the warehouse and outside in the yard. And here's the results. After he left that engagement, he had $78,185 in 30 days in his bank account. This was not a big company in a big city. They were in a small town, population of 1,700. And the revenue was just $1,100,000 a year. How would you feel about making almost $80,000 in your first month if you were running an advisory service such as this? It would make a big difference, wouldn't it? It'd perhaps for some people watching this, it'd be life-changing. But if you're the principal or a partner in a firm and responsible for generating your own revenue, you can see how lucrative this type of consulting work can be. And if you think that charging almost $80,000 for your first month in consulting is intimidating, don't worry about it. Just do the same work and charge less. It's up to you. But the client was happy to pay because my friend saved the business. Now, there are not many people who know how to provide cash flow advisory services, even if they are financial professionals. They don't know how to solve these problems, or even if they do, they're not confident about the best ways to do it. But it gets worse. Whether it be to current or prospective clients, they don't know how to promote this type of service. Clients will be attracted to you when they know that you specialize in this area. Now, another client was a manufacturer. He manufactured specialty plastic containers with sales of about $2.3 million a year. And again, they're in a small town. They have about 52,000 people in the city. The owner asked my friend a simple question. What the heck is going on? He was running at 100% capacity, selling the same volume as last year, but his revenues were down. Profits were down even more. He explained that they're running 24/7. They can't produce any more. The machines are expensive, so they can't just add more machines because of, tight cash flow. The workers are skilled, but they have to be trained. But they knew they had to buy machines. It wouldn't be a quick turnaround to get it up and running, but they had so much demand, they couldn't fill the entire backlog of their orders. So my friend went to work to find the extra cash so his client could buy some more machines. He focused on cash flow and identified two key issues: distribution channel allocation, shifting from high margin to low margin channels, and he discovered that the product pricing was off. He was selling his goods for too little. He talked to the production team and identified huge cost savings by buying nuts and bolts through different suppliers. From that area alone, he calculated the first year's savings would be $97,652. It would be a recurring savings every year, and it was easy and fast to implement and represented about 4% of revenue. Then he projected the first year with no increase in sales volumes. The total cost savings, including the nuts and bolts, were about $202,000. And margin improvement between pricing changes and focusing on high margin distribution channels would be $300,000. This is a total of $502,554 in savings on a turnover or on sales of $2.3 million. And it's a recurring annual increase to the bottom line. The engagement made my friend's cash flow advisory firm $45,328. And it was just a part-time engagement of 62 days duration. The company was thrilled to pay it. Why? Well, they were getting a 10 times return on their investment in the first year. Now, here's some examples of strategy. This isn't, I'm not sharing the complete list here. It's much bigger than this, but give you an idea of some of the general strategies: finding new suppliers, reduce scrap and waste if it's appropriate for that type of business, renting excess space, offer in-house payment plans, all sorts of different methods like that. On the balance sheet side, we're talking about inventory and purchasing, increasing inventory turns, negotiate better payment terms, and so on. Going down the page here, automatic inventory restocking, lower raw material inventory, decrease work in progress inventory, and on it goes. Cost of goods sold, outsource parts of your production, outsource all of your production. You can see the list there. Use sell-through rebates from suppliers and so on. On the revenue side of things, increase the pricing, which is what happened with that last example story that I gave you, or perhaps lower your prices. It can work the other way as well. It really depends on the situation. What about selling add-ons? So these are more marketing-related issues. To me, because I come from a marketing background, is the most exciting area because you've got so much upside potential. You can only cut so far when it comes to cost reduction, etc. Sell in-house services, sell third-party services, sell add-ons, upsell, all of that. More on the revenue side, perhaps generate referral income. Number 16, offering auto ship, drop shipping, lots and lots. They've got a very big list on that side of things. On the for expenses, maybe renegotiating leases, move bill due date, use manufacturing co-op allowance if you've got one, increase your insurance deductible, and so on. Shop around for insurance, change merchant. A lot of it is common sense, but it's the detail, the devil in the detail. If you've got 100 different strategies that you can use that are at your fingertips, it's a matter of matching and marrying the right strategy for the right client. Now, one last thing. I said I'd give you a few pointers on attracting clients for advisory service. I'll do that, but before I share, let me say this. Your best option is to work with the existing client assets in your business. But if you're at a point where you know you need more clients, especially A-class clients, the next few slides will be helpful to you. Now, I'm coming from a marketing background here. I work with the expert class to help them attract A-class type clients. It's my thinking that underpins these ideas. So if we're talking offline, the traditional way of doing things, you've got current clients, going back to them, but there's no point going back to current clients if they're just going to refer you to some dud businesses, because you can't help everybody with these cash flow advisory services. Can't help it. Some businesses are terminal. It's as simple as that, and you know that as much as I would. But so if we're going to get referrals, we want clients that have lots of upside potential. They've got some substance to them. They've just got themselves into a spot of bother. That's all. Referral sources, speaking gigs, business networking, get articles published in newspapers and so on. You can run ads as well, but the problem with ads is that they tend to attract. They tend not to attract the best quality people. But the offline services are still there. But of course, things have changed somewhat, and I'm not sure how permanent these changes are going to be. But we've got the COVID thing that is still kind of percolating along. They keep it's like your worst friend. You just can't get rid of it. It just keeps coming back to annoy you, to upset you, or even to hurt you. So it's a bit like that. So this is why the online world has come into its own in a bigger way since the advent of COVID. And what I think has been happening is that a lot of people who were doing business exclusively offline previously, I mean, they might have had a website or something like that, but that's only one small aspect of online marketing. But since COVID thing, they started doing some Zoom calls and doing things like that, and thinking, hey, this isn't bad. If I could just learn how to master this online thing, it'd be awesome. So we've got lots of options here. Uh, LinkedIn is a great platform for business clients. Every client that I've acquired since May, with one exception, has come from LinkedIn. Okay, but you've got to know how to use it. It's like everything. It's like driving a car. You've got to learn how to drive it. Podcasts is a good one if you can get some podcast. I'm not saying for you to have a podcast unless you really want to go down that pathway, but to become a guest on an appropriate podcast, small business podcast or something like that. Zoom meetups, collaborative networks. I love them. Online advocacy. Sometimes, if you're involved with a collaborative network, for instance, and some of the people like what you're doing, you might find that there will be some key people within those networks who will start advocating for you, and then everything becomes a heck of a lot easier. Email is another technique that we use. We don't do, if I'm working with an accountant, I just cold email, okay? So I would, if I'm going to send an email to somebody, I'd at least be connected with them on LinkedIn or something like that beforehand. So there's a bit of name recognition there when you do send them a little email. SEO for websites and other pages, other digital pages. A blog, I separate that because there is a great deal of potential SEO, Google kind of benefit from a blog, but you need both. You need SEO done on your website and done properly, appropriate for 2022. For your blog, you need to have regular content there, but it's got to be SEO content and it's got to be good. Okay, because if it's not good, if you've outsourced the writing of blog content to someone living in a developing country, it'll tend to be formulaic, doesn't have any sizzle, and it's not going to retain people on the page for very long. They'll have a quick glance at the first sentence and bang, they're gone. That's not how it works. That's not the way to make it work. And then, of course, you've got advertising. But once again, advertising, you've got to be careful there because you can spend a bunch of money on advertising and get very small returns from it, or no returns, or the inquiries that you do get are from sort of people that have got bad quality businesses that are never really going to that really don't have much upside potential. So anyway, there's a few thoughts there. So where to from here? Well, I've got nothing to sell you except maybe 30 minutes of my time, and I'll even give that to you for free for now. It's quite simple. If you like the idea of adding a cash flow advisory service to your business, reach out for a chat. That's what we can do, and I'd be happy to meet with you for half an hour on Zoom or something like that, and then I can share more options, answer your questions, and discuss. This type of a concept is going to be a good fit for you because it's not appropriate for everybody. If you're up to your eyeballs in tax and compliance work and you kind of love it, well, this is probably not going to be for you. On the other hand, if you've got plenty of action happening on the tax and compliance side of things, but it's not the most satisfying. It pays the bills, etc. But you'd love to do something more interesting as an add-on for your practice. Okay, maybe you should talk to us. On the other hand, if you already have this type of service but would like to use it to attract more clients, you should also reach out. Client acquisition is our jam. Reasons to talk would be, number one, you're interested in adding a cash flow advisory service, or at least exploring the concept and determining if it's going to be a good fit for you. That's number one. Number two, if you already got this type of service, but you'd like to, some kind of advisory service, it doesn't have to be cash flow, but you'd like to use it to attract more quality, like A class type of clients, you should also reach out because client acquisition is our jam. So there you have it, client advisory services, when tax and compliance work is no longer enough. This is Kim Willis. Bye for now.